afternoon. I welcome the members who have joined for this very important VCM on improving audit quality under the Companies Act 2030. And today we have with us CA Srinivas Joshi ji, who is the chairman of Corporate Law and Corporate Governance Committee. CA Anuj Goel, vice chairman in absentia, will be joining us very shortly. The secretary to the committee, CS Sarika Singhal, my other colleagues who have joined online. The topic is very germane to the existence of the chartered accountancy profession itself. Ever since the act has come into force in 1949, so this journey of 71 years plus has been a very symbiotic one in the growth of the economic India and where we stand today. We have come a long way, and in fact, all along the profession has provided the resilience, the soothing comfort to the corporates, to the regulators, to the society at large, that the financial information is just right. And in fact, if we see the current debates which are going around regarding the role of audit quality or the audit profession, it is something which is not very new. In fact, all the professions would go through these challenges of trust, relevance, utility. And I think in a democratic setup where we are in a very big country and large number of listed and unlisted companies and other set of stakeholders. So if we look at the conception of audit quality, always the stakeholders, whether it is the end users, and there is not a finite set of stakeholders. It could be the government, it could be regulators, it could be the lenders or the general public. So the perspective of each set of the users would be different. While the auditor would say that I have complied with the procedures, the standards set out, the firm would try to get comfort level of saying that I should be able to defend what my auditor has done, and the regulator may try to see that the public interest is not harmed, but it is the overall public which are trying to get a, what do you call, whether the purpose for which the audit has been done, is that meeting the purpose. So this is a ever going debate between and seesaw between what the public perceives as the role of the auditor and what the audit profession is doing in terms of the standards laid by the institute, in terms of the audit procedures and whatever requirements have been laid out. But ultimately, fact remains that because the importance of the audit profession in maintaining the trust, in maintaining the resilience, in maintaining the strength to the financial ecosystem and whatever the corporates are doing. So they are all very important. So while we have different professions, the role of audit profession is to give reasonable assurance as different from being a whistleblower, but the way the ecosystem of corporate regulations is changing, possibly the expectation of government and the other regulators are going in a different direction, and the work program of the institute, whether it is through the corporate law committee or FRRB, peer review board, and other standard setting boards which the institute has, the entire ecosystem, what the institute is trying to do is only towards the improving the audit quality, and a special directorate center for audit quality has also been set up. So in all, the institute has been trying to keep in tandem with whatever is the expectation of the regulators and the society at large. But this subject matter is such that, and the way the things are changing, possibly a lot still remains to be done. So we have a very relevant speaker today, CA Srinivas Joshi ji, who is the chairman of the committee, and in fact, many of the initiatives, like even the guidance note on Caro and Schedule 3, which addresses a lot many things which has to do with the audit quality. So it is being steered under his stewardship. He is also the vice chairman of the Audit Assurance Standard Board. He has been in the council for 6th year and earlier has served for 3 consecutive terms in the Western India Regional Council. He has been associated with more than 2 dozen committees in the institute, mainly in the technical standard setting and compliance domain. So, with these words, may I request C.A. Srinivas Joshi ji to set out the topic for today and how the institute, the members, the firms, they should be scaling up the bar, the benchmark in terms of what is expectation, what is expected, and what is in compliance with the set out procedures, what has been laid by the institute. So it's a complex topic because in terms of audit quality, we are laying down what is public expecting, but are those expectations real? Are they trying to be convergent or divergent with the regulatory arbitrage, or what is generally the conventional scope of audit? So, to take you through all these demystification and explain the contours of the role of auditor. So, with these words, I welcome C.A. Srinivas Joshi ji, the speaker for today, to carry forward the proceedings. Over to you, Srinivas Joshi ji. Thank you.
Thank you, Rakesh ji, Director of the of our CL&CGC, and Sarika Singhal ji, the Secretary, Chartered Accountant, and Secretary of the committee, and all my friends. I'm Srinivas Joshi, Chairman of Corporate Law and Corporate Governance Committee, and Senate Council member, speaking to you on this occasion of our video conference on enhancing quality in audit. Friends, we in corporate law deal with a lot of subjects, not only company law, but LLP, also SEBI Act, and so many things. And we have been helping the profession over a very long time to see that we maintain, in fact, quality in every work that we do under Companies Act or corporate laws. And Sarika ji has been sending weekly updates and monthly updates to all of us to see that we are completely, having all the knowledge of the latest laws and latest provisions. And you know that a spate of changes are coming, which are very, very important to our profession, which are being sent by her to all of us on a monthly basis, weekly basis, so that we are updated well in time for the future. Recently, you are all aware that we have talked about, we have sent you about all sorts of changes which have come in accounting rules 2014, audit and auditors rule 2014, then schedule 3 changes in division 1, division 2, division 3. We have been talking on CARO 2020 changes, and we have so many lecture series, we have so many webinars on this which are uploaded on ICAI website, ICAI TV, and Digital Learning Hub, and all this together with whatever we are trying to learn is absolutely necessary for all of us to get the quality in the work that we will be doing. Friends, I thought of talking to you today because of the reason that there are this quality is a subject which comes up time and again. Very recently, NFRA published one more report on the audit firm. And previously, of course, you know that the previous report was on September for the auditors, and that was published. And now the second one has come on the website. That all starts with all this, discussion once again on whether we can give quality in audit, or whether we are lacking somewhere, or whether we need to improve somewhere, or whether these are one-off instances and we are really fully compliant and fully knowledgeable to give the quality. But I think, friends, I personally feel that quality is never an accident. Quality, friends, is something that we will talk, and we will see why quality, how we are trying to give a quality, and what are all the reasons we should go about it. in our practice, etc. I'll request office to start the PPT. Sarika ji, we can start with PPT. Yeah.
Yes, sir.
Yeah. So this is of course our name of the topic, enhancing quality. Let us go to the next slide. So here, what I was trying to tell you. Next slide, please. I was trying to tell you that quality that we are trying to maintain, or we want, every professional feels that I'm giving a quality, or at least he is in mind, whether a proprietor who is very, very hard pressed in his office is trying to deliver to his clients, but he in mind knows that I need further improvement in the work I'm doing. So, but all of us understand that if we want to give quality in whatever we do in life, it will need time, effort, money, everything it will need to be invested, so that the quality comes automatically. It becomes a part of our genes and it comes automatically. And I'm pretty sure that when we think that we become quality conscious in every part of our life, everything in our life will change substantially. But as I say, it is never an accident. We'll have to work very hard to give quality in every work, everything in life that we are doing. Coming to this particular, when I started this, I said that this particular thing I thought of talking to all of you only because of this kind of expectation gap that is in the society. You see the report which I referred to. Now, this kind of expectation gap is because on one side, all our auditing standards, all our literature of the institute, technical literature, is saying that it is not the auditor's duty really to go about really to be a investigator. They are saying that this is our duty, but our duty is to be is an auditor, and it's a different duty to be an investigator. If you really see SA 200, it says the auditor may accept records and documents as genuine unless the auditor has reason to believe to the contrary. I think that particular statement doesn't gel well with what society expects, or what government expects, what regulators expect, what all the other stakeholders expect from auditor. Even though this has been continuously being given to the general public, to the regulators by the institute, that these records are taken as genuine unless we have reason to believe to the contrary, the auditor cannot be blamed. But I think this is, of course, with those who are trying to listen to us and understand what is our real role. But it shouldn't also we shouldn't also give an impression as an institute or as professional chartered accountants that we are trying to lower the quality in any way. We don't want either to lower the quality or lower the expectation of those who are taking our services. Neither of this is what we are trying to do as an institute, as we all together as professionals. We want quality, and we are never shirking our responsibility under any of the regulatory provisions or otherwise, or ethical provisions of the institute. Now, coming to this, therefore, internally we must speak as to how we change this perception on one side, and secondly, how we prove to those stakeholders, how we prove that we are really giving quality in the work that we are doing in the audit under Competency. Friends, therefore, the second line I'll read in SA 200, I read the first line: the auditor may accept records and documents as genuine unless the auditor has reason to believe to the contrary. There is one more sentence after that, which all of us should remember internally when we are talking in a closed group like this of chartered accountant. The same para says, nevertheless, the auditor is required to consider the reliability of information to be used as an audit evidence. So I think this is where our role is important to us. And this is a role that we must understand, that the reliability of evidence, completeness of evidence, accuracy of the data that I get is so much important to give the quality. If the input is wrong, obviously output cannot be believed to be right. And therefore, we have to be very, very cautious. Even though we are not investigators, if there are indications that we need to look further into it, we need to change our audit processes. We need to have the nature, extent, and timing of these processes to be added. I may have planned for something, but I may get evidences which need further processes of nature, timing, and extent of processes in a particular area of the work I'm doing. Then I need to expand, irrespective of the fact whether I get paid for that or not, for the additional work I did, because in my mind I know I must give quality, and I tell you that this, if I do that, then whatever is anyone points a finger at me, I can always defend myself. Friends, it is always said that auditing standard, which we have been learning from our stage of doing our CA, these auditing standard is a protective shield around us. If I work as per auditing standards, then I will give the quality expected of me in any case. So if auditing standard, of course, one of the standard is on documentation. So I must document, and we'll talk about it. That documentation is so much important of what I did and how I did it and how I came to a particular conclusion. If I can do that, it's one of the finest protective shield that I have for my defense against any attack from outside. Even though I can't breach the expectation gap, this gap is not only in India, it is worldwide, that what they expect. Always the general public has thought that moment auditor has signed a balance sheet, there is no fraud or there is no error. But we are saying, even in our audit report, if you see SA 700 illustrative report, we say our audit is not a guarantee that there is no material misstatement due to fraud or error. If fraud or error, and if it is done at a higher level of management, if it is done by the higher management, it's extremely difficult to find it out, and therefore it is likely that it may be there may be a material misstatement due to fraud and error, but I may or may not have been able to find it. But in spite of all that, I don't think the general public really understands the line by line, how we write and what we write. Even though as an institute, we try in every platform, President has been trying to say that what you expect from us and what we really are expected to do, those things are different. But in any case, I think we should be aware of this gap. Coming to the other points that I would like to say before we go into the real subject is, what we are doing as small and medium practitioners, we should be a reviewer. When we talk of we as auditors, we should be reviewer. But we reviewer in a sense, someone else prepares accounts, someone else prepares financial statements and final version of it, and I only review. This is a maker-checker concept, because I'm not an accountant, I'm an auditor. If I want to be accountant and go in industry, that's a different thing. But the moment I become auditor, I can give quality only if I'm a reviewer. If I myself prepare and I myself review, obviously there may be errors or omissions which may go unnoticed at my end. So my quality will suffer next year. When you are looking at the same accounts, same financial statements, you will say, how this error has happened, how I could miss it. I can never miss it. This is so simple, so obvious, how I can miss it. Now that happens because we assume sometimes the role of preparer rather than reviewer. If you are segregating these duties absolutely in a way it is expected in the auditing standard, as it is expected by the institute or by the professionals all over the world, if we really do that, then the quality will enhance automatically because of maker-checker concept. Almost all the errors will be identified and no misstatement would happen. Therefore, we must do audit and not accounting. And we must not prepare the financial statement, or we should not compile the information for notes. We cannot do this error even in a tax audit or a company audit at all. If we do that, naturally quality will suffer, as I explained to you. One more thing I like to tell you about the quality of audit under statutory audit under Companies Act. If you carry out, if you want to carry out the audit, there are two checks necessary before we can do audit, and therefore for completeness of a record, accuracy of a record, I need to do two things. One, I must carry out internal control assessment. Internal control is internal financial control over financial statements. I must assess fully. If I can assess them, I can use checklist, for example, for this. And if I can assess it properly, then I know the gaps. I know the gaps in internal control designing. I will know gaps in internal control implementation throughout the year. And you know the IFC guidance note you must have read, which was issued in 2016 by ICAI. It says that such control need to be tested during the year, nearer to the balance sheet date, and even after the balance sheet date. And it gives various kinds of control that they need to be tested. Now, if you really do that, there is much less likelihood of material misstatement or error omission creeping in, and therefore the quality is automatically ensured. Moment you find a control is either missing or is very weak by design, or a very strong design control is not being properly implemented, with all that, you can always change your nature, timing, and extent of the audit procedures. I'm reusing this term again and again, so I should explain. The nature is the type of work I'm doing. Say I'm doing sales, purchase, ledger, scrutiny, etc. Nature, timing. Timing is when I will do it. Suppose stock checking, I can do it 4 times a year. Physical stock, I can do nearer to balance sheet date, exactly on balance sheet date, after the balance sheet date also. And SA501 tells us how to reconcile. So this is the timing when cash count, whether I want more number of times, if there is a large cash transaction, like in case of hotels, or maybe hospitals. So you can have the checking done more often if you want the timing. So you decide the timing when you want to do a particular work. So nature of the work, timing, and extent. Extent means how much I will be, I need to do. What is the quantity I will do? What is the how much quantity of the work I'll do? I'll do 60% checking. Will I do checking all above 5,000 in a particular item? Will I do? I mean, how much I will check? Whether in percentage of value I should check, or whether I could go for higher value items, or if there are too many lower value items, how many of that I'll take? That is the extent of checking. So every time an internal control is weak in design or weak in implementation, or there is an absence of internal control, obviously I'll be the one who will check this. And I mean, check first the internal controls. I can use even the checklist, and thereafter I will design. Whatever planning I have done, I can modify my planning according to this particular result of this particular assessment. Now, second assessment I need to do is information technology. Whatever packages my client is using, to that extent, I must check those packages. What goes in those packages, who is keying in the data, who is validating the data, and what comes out of it is satisfactory. If the information technology, whatever packages are being used, it is customized package, off-the-shelf package, whatever, we must test the packages to understand what are the issues or what are the bugs which are there, or what are the other issues I can get while using the package. Whether package gives a trail, the recent amendment in company law which says that every accounting package should have a trail. In fact, our profession already knows this, that it should have a trail, that all changes made. Now, package like Tally, you can change something and you may not see the trail, or the trail is not on, or the passwords are not used. Password system is there in Tally. I will request everybody to be on mute. These packages do have their internal checks. Like there are, even in a package like Tally, you can use your password system. There are levels of password in Tally ERP. Why I said Tally? Because many of us or small businesses are using Tally. Now, it doesn't mean they don't have the control. They have the control. They are not made on, or they are not in use. So I must insist that they are in use. And I see that how much is the danger of the values being changed, the values being not actually authenticated. There are no approvals for most of the journal entries, which are key journal entries. Journal entries, the whole result of a particular organization can change by just passing 2 or 3 entries of either some expenses due. Say if you pass an entry of 8% of a particular or the sales as a discount to be given or commission to be given. Now that one entry will change the whole results of a particular organization. So what I am trying to tell you is that if this has to be authorized, that particular entry itself changes all audit you did do for days and days and months will get just be a nullity. We will not give any qualitative result. If you can't check the simple last 3 journal entries, will change all the results. Like they change the depreciation. The organization can decide that they will whatever is the life of asset under Companies Act Schedule 2 says life of asset can be decided on a particular assessment, even internal assessment to be done by the company. Now, if they try to do this, they will change the way they provide depreciation, the way they want to have write-off of intangible asset, that is amortization of intangible asset. Now, with all that, you are aware that it is possible to change the result only by few journal entries which do not have authentication from the owners or the persons who take decisions. Now, all that is important to be carried out for quality audit, because it is your final report, friends, is the only thing that the person who receives your financial statement, the signature of the directors and the auditor, along with that, there are notes to account again signed by us, but really speaking, what they are looking at is report. Your report should speak really the quality of the work that you did. And we will talk about how to enhance that over the period. But here, that is extremely important that you do your internal control assessment, you do your IT control assessment, what is software control, hardware controls, and other controls. Even if you read IFC guidance note, it tells you that the control on journal entries is extremely important because it can change the results substantially. Now, here you should be aware that all quality work you did would become zero if you do not look at this control on passing journal entries. Journal entries can reverse what was already done by you. Just by single journal entry, all the work you did can be just reversed. You are aware, I need not explain to you as a chartered accountant all this what you listen. And therefore be aware that quality, again I say, is not an accident. It needs huge input from our side in the audit process to be done. We'll also talk on SQC 1 to SA 220. Now these tell us about firm level quality control, how we maintain a firm level quality control. And that also talks of similar things to be done by us. What are the things we do? And as we progress, as we speak more on this today, I will also tell you about this. Next slide, please. Friends, if you ask me what institute is doing as to maintain the audit quality or to enhance the audit quality for the profession, what institute is doing? So I just listed out some of the some of the efforts that ICAI is doing and helping all of us practicing chartered accountant, or even if we are employed as accountants, to see that the accounts and the financial statement have the quality desired by the stakeholders. Now here you are aware that we have committees like ASB, which design standards and gets it approved either when a CAS-NAFRA. Then we have AASB, Auditing Assurance Standard Board, which sets up standards relating to audit. I mean, those international standards are taken up by these committees and they are adopted to India. Even INDAS ASB has adopted. Now we have a separate committee on INDAS as well. And these committees keep on issuing guidance to us. There are guidances in many forms available to us. And if we can really follow this guidance, our quality of company audits would go up substantially. This guidance is available in the form of videos. This guidance is available in the form of audiobooks. This guidance is available in the form of MCQs. This guidance is available in the form of digital learning hub. uploading various things for all of us, which are available free. Not only that, these committees have also given implementation guides. Implementation guides are available to us on all matters relating to accounting standard and auditing standards. And I think if we can really go through this, I think we will be highly benefited by, by all the issues that come up in implementation. Now coming to the, this is what they do original work, like they create standards for us and they give implementation guide for those standards. That is how we start our work and do our work. When we do our work, Institute has set up several committees which review our work. They review our work in this because these committees have been set up to review work and give guidance. That is to give the advisory to the chartered accountants, individuals, firms, etc., to enhance the quality or to point out that where we were missing, we have done some errors, we have done some omissions, or we have not given attention to some regulatory provisions, some disclosure provisions in accounting standard, or as per the regulatory law, as per laws and regulation. And they keep on pointing it out to us by way of advisory that you should understand this, that these are the errors that we are making, and please avoid it in all our work, at all your work that you're doing. Now, if you can see these committees, one is Financial Reporting Review Board. Financial Reporting Review Board, friends, analyzes the listed company accounts. They go into various, I was also chairman of FRRB in the first year of this term, and we all, and I'm a part of FRRB all the years whenever I was in council. Even today, I'm a part of FRRB. This committee always does, help. This, you first understand that this work of large listed companies or even listed companies, why I say large, we are even looking at smaller listed companies, and is done by large firms in this country. In spite of that, there are reviewers, there are groups which review. There is a reviewer, original, then there are groups which review, and then it comes to the board. Now, board still finds several things lacking. So you can say that every firm in this country would need some kind of guidance from the experts, and those partners would need at least some guidance that what is going wrong. And FRRB has an advantage. It's like income tax officer, which has an advantage that FRRB has several other accounts available to them. Similar to that, income tax officer giving you a transfer pricing, he compares and says your transfer pricing figure, the ratio, rate you are using is wrong. Here, similar thing, FRRB has a huge data bank, and it has a past data also where decisions are taken. And therefore, FRRB can guide us the best. FRRB has issued, Financial Reporting Review Board has issued several booklets on this, on, the common errors found in AS, that is accounting standard. And now, of course, all the listed company are on Ind AS. And therefore, now they have started a series of books. First book has come out, second will come out soon, saying that common errors found in implementation of Ind AS. So I think this is one committee which we can help, even though we may or may not be doing listed company audits. What I will request you to see is that to go through the books, because this is nothing but whether it's a big company, listed company, or a not listed company or a smaller company, we need to know what kind of errors are possible in the that our colleagues in other firms are making, so we can avoid them. It is like, every wheel need not be reinvented. If somebody has thought over it, somebody has done something right, corrected it over the period, that experience I can always use. And FRRB gives us that experience in the form of booklets, which says that you can follow this, see that these errors are not made by us. Another committee is Quality Review Board. Quality Review Board also, friends, has less number of elected members and more government nominees. This QRB is under CA Act, and Quality Review Board also publishes the books that what kind of this Quality Review and FRRB, there is a difference. Quality Review Board will audit all the will go to all the audit firms for a particular company. For companies having joint audit, suppose a bank has 3 auditors, 6 auditors, it will go to all 3 or 6 auditors and review the work for a particular bank. So that is how QRB works. FRRB works for a particular account separately and gives advice. Now, QRB is giving advice to all the firms, joint auditors, on a particular assignment. And that assignment, whatever all these years they have got the errors, they are trying to tell us. They would tell us in nutshell what they found. And this is where I think we need to look at those books again and get a guidance. Third committee which was formed a couple of years back is TAQRB, Tax Audit Quality Review Board. Even though it has nothing to do with company audit, I would like to point out to you that this kind of committee, again, they have already reviewed tax audit reports and given advisory. They have come out with a book on that. Now this year onwards, they will do GST audit review and will come out with another book probably by next year when the GST audits are reviewed, and that will give us a tremendous guidance on doing those kind of work. I'm just pointing out to you that this is possible. This kind of quality enhancement is possible by us in this case. So that is why I'm pointing out to you, now, even though it has nothing to do directly with company audit. Another board that is doing the work for us is peer review board. Now, peer review board, friends, is a board which comes to our, the peer reviewers come to our office. All of you have faced that. Now, when peer reviewer comes to our office, he reviews various files. Say he is supposed to review 10% of the files. And he has been trained to review those files and point out the process errors in doing the quality work. When the processes go wrong in a firm, obviously the result is not likely to be very qualitative. And therefore, he reviews various files, looks at the processes. He is, friends, remember, not challenging our decision. What he is challenging is the process towards that decision. So he is saying that this particular process was not enough for you to decide on a particular thing to be a qualification or to be an EOM, that is emphasis of matter, or CAM, key audit matter. This is not sufficient. What you have done, a documentation, the work, you cannot say everything is in the head. The documentation is not enough to prove that you are really doing a quality work. So peer review board reports are also extremely important for us to maintain the quality. I will like to mention to you some of the books that these committees have given, and which will help us, some of the publications. One is ASB has got Ind AS disclosure checklist, which they issued in February 2020. They have also issued accounting standard quick referencer in July 2019. So those who are doing Ind AS can look at Ind AS disclosure checklist, and all of us who are smaller and doing smaller entities, we can look at accounting standard quick referencer of July 19. If you look at ASB, there is several guidance, but I like you to look at CARO 2020 guidance note. It will be applicable from this 22 finalization, not 21. But guidance note on CARO 2020 is extremely well written. I was a part of that when we made various groups. Fortunately, I was there as a part because I'm a vice chairman of AA Auditing Assurance Standard Board. And when we made that guidance note, we have done a lot of effort. A lot of experts have helped institute to see that the guidance note has come out properly. Another guidance note, as I already mentioned, of AASB is guidance note on CFS. This I did not mention. I mentioned the other one. This consolidated financial statements also, there is a guidance note how to do it, etc. Now coming to other thing is TAQRB. TAQRB, they have given you approach to tax audit under 44AB. There is a big checklist, and this checklist is actually a replacement of the 44AB guidance note issued by the ICAI. To maintain the quality in tax audit, you will definitely like to look at TAQRB checklist that is issued. It is available on the website, on the page of ICAI, TAQRB page on ICAI website. And if you can download that, it is issued last year. And it is one of the finest document I have seen that you can use as a checklist for doing your tax audits. It will give a phenomenal quality if you really can go through that. Friends, another, So now go to the next slide, please. Friends, other thing that Institute is doing to maintain the quality is, one is we have set up a Center for Audit Quality. Center for Audit Quality is in Jaipur, and this center, I am currently a deputy convener of that center. This center has started a course on audit quality, and this center, this audit quality course is available online. It is a 1 month course. It is available online. It has all the first half of the course is all auditing standards are covered. And there are experts talking on this. And second part, the experts are talking on information technology, including, blockchains and cyber security and artificial intelligence and several things that the auditor should know in the current world to make himself ready for that, ready for the work as a person from digital form. Now, this course I highly recommend to you. In physically, when you, after the pandemic, if the physical course starts, you'll have to go to Jaipur, stay there and do it. Instead of that, you can do it today. Online course is available, online version is available. Please join that. It's a very small amount, and about, I think, 7,500 plus GST for a course of a month. And that will enhance the quality substantially. Another thing that institute has, this particular Center for Audit Quality has come out with AQMM 1.0. What is AQMM 1.0? AQMM 1.0 is the audit quality maturity model. The audit quality maturity model that we are that the Center for Audit Quality has today given. It is a self-evaluation model. The self-evaluation model that is already unveiled. It gives four levels. So if you see this audit quality maturity model, it is based on SQC1 and also SA 220. This is a firm level model, and it gives various parts are there in this particular model, various parts of that model. And if you can really look at that particular model in a way, you will be very highly benefited by by enhancing the quality of the overall quality that you give to the client. It is such a detailed model. It is we request you to look at it every quarter and see every quarter how much enhancement is required. It tells you what is lacking, what is less, and we can always do it. It talks of practice management. It talks of human resource management. It talks of several things, and you must look at it yourself to see how we can really develop that. Improve ourselves quarter to quarter. This will become compulsory after a few years, and whenever it becomes compulsory, a peer reviewer will probably recheck this, that what is your AQMM score. And we are saying that over the period, even audit committees or boards of the companies would start appointing auditors based on AQMM score. And that's why it is so much important for all of us to get higher score. And if you want to get higher score, obviously it is very, very important for us to see that we do this quarterly exercise and see that improvement is done until it becomes mandatory for us to follow. Another quality quality enhancement effort by the institute is DCMM 2.0. This is Digital Competency Maturity Model. This digital competency maturity model tells us about several things. It tells us about this. First of all, I must say it was having 1.0 version. Now 2.0 version is taken up, is so good that it is taken up first by UK and then by whole Europe from India. They say, yes, this is a fantastic model and it will really tell us many things. First, it tells us the level of automation relating to audit processes and the audit services being rendered by the firm. It also says it looks at level of automation of the client at the client end, and it also assesses the automated audit tools that a firm is using for working on the automation of the client at the client's end. It also looks at training given to employees for this audit tool, working on the audit tool, and it really looks at the ability of a firm to handle the digital evidence. And therefore, if the digital evidence, the higher my DCMM score is, I'm able to handle the digital evidence in a better manner. So it tells you the current level of maturity in digital competency, and it will enhance it. So this also should be used every quarter and see how much enhancement you need or you can do it. Now coming to the next one, implementation guide, I already said. A guidance note there are guidance note. Now, Schedule 3 guidance note issued by CL&CGC, this committee where I'm a chairman currently and talking to you. Schedule 3 guidance notes are under revision, revision 1 to 3. due to changes in Schedule 3, which would be applicable from March 22. And therefore, actually not March 22, any account, any where the account starting, accounting year starting after 1st April 2021, if you want to close it early, it will be still applicable, not necessarily March 22. But in any case, Schedule 3 guidance note or CARO guidance note, as I said, are extremely important. TAQRB guidance, we already talked about. Next slide, please. Friends, another thing that we must look at is a particular phrase that is used in our auditing standards. I mentioned the auditing standard, the auditing standard which talks of the basic audit requirements, how we do about it, is ASIC 200. Yeah, all our auditing standards start with that is the first standard, other than of course SQC1 on quality. The one that we start with, that is SQC1, is called a mother standard, but thereafter we start with ASIC 200. ASIC 200 says lot of things about a particular thing. It talks about professional skepticism as a phrase, and this phrase is extremely important throughout this particular standard. They are talking of professional skepticism. They say quality in audit can come, and this is the approach we are talking about, how the quality will come. They say that the standard says, ASIC 200 says, that what is professional skepticism? Because it says that professional skepticism is absolutely required to do the quality work, and not only to do the quality work, to avoid errors and omissions in the or whatever errors and omissions have been done by the accounts or by the company can be found out by auditor if he has a professional skepticism in the work. Now, first of all, you must understand what it refers to. This professional skepticism means being alert to many things. What is being alert to? One is being alert to the audit evidence, which contradicts the other audit evidence already obtained. So today I got some evidence. Suppose one evidence was, I have a management representation letter which says that this is how the particular transaction has taken place, and actual audit evidence I got does not match with that. So this is contradictory to either what management said verbally or in writing, or the management has told us something last year or the previous audits, and we have finalized on that, and today the final result does not confirm what was said and that it was right. And therefore, the audit evidence I got today may be in variance or contradictory to the audit evidence already obtained. One is, of course, what the management said. But let us take another example that, for example, the debtors or creditors confirmations that we got do give substantially different figures than what is shown in the books of account. That is a contradictory evidence, right? One, you have checked the accounts and found a particular balance, and the parties are not confirming, the loan parties are not confirming, they are telling something else. So this is a professional skepticism, finding out that the currently obtained audit evidence is in contradiction. And we must remember all the audit evidence we received for all the major items in the profit and loss balance sheet, etc. Now come on the notes. Now, second is professional skepticism is being alert to the information that brings into question the reliability of documents and responses to in response to the inquiries, which is used as audit evidence. So sometimes it is the information that we receive brings into question the reliability of the documents that I'm looking at. So that is another way of looking at professional skepticism. Now, another way of looking at it is professional skepticism is being alert to the conditions that may indicate possible frauds. There may be many queries which are of small nature. That many times the entries in the accounts do not match with the cash vouchers. Suppose we say there are small errors, a few rupees, few lakhs, but these small errors may add up, giving a indication of a possible fraud. Simple things may be missing. They may be small queries, but they give indication of a possible fraud. Suppose the scrap was sold 12 times and 11 entries are there and 12th entry is missing. And we know scrap is always sold in cash. And if the 12th month, every month the scrap is sold. Now 1 month entry is missing, and after the inquiry, the accountant accepted that the cash was received, but it was just lying in the drawer. He said, "Yeah, I forgot. I'm just depositing this now." This gives you an inclination there is a possibility of fraud. Now, this particular information, this is the condition which indicates that he may have done it in some other cases also, by just seeing that if nobody objects to a particular thing, and it may have happened in last year also, last year also, that he did this. So there are conditions that indicate the possibility of fraud or fraudulent behavior. This is professional skepticism, looking at or being alert to such conditions. Now, there can be conditions which gives us or suggests the need for audit procedures in addition to those considered by SAs. So we may have to look at additional audit procedures, and this professional skepticism means being alert to such incidences where it is necessary. Now, professional skepticism, if we follow what it does for us, not only it enhances quality, it reduces the risk. It reduces the risk of several things. One is it reduces the risk of overlooking the unusual circumstances. So when you are so alert, you immediately sense this is not a usual way of doing work. This is not a usual way of doing the things. And therefore, you are skeptical about what people are saying around about that, what the management is giving explanation, what kind of evidences are being produced to you. So you are not looking at unusual circumstances. This reduces the risk of avoiding or overlooking the unusual circumstances. This professional skepticism also reduces the risk of overgeneralizing anything. I said that so many small queries in cash. Okay. So it must be inefficiency of the cashier. This is overgeneralizing. Professional skepticism will like you to look at lot of more things than that and come to some other conclusion. Now, again, it also reduces the risk by using the appropriate assumptions in determining nature, timing, and extent of audit procedures and evaluating the result. Now, in addition, I like to tell you about something about audit quality, that not only professional skepticism works, but we need to have a professional judgment in doing the work to maintain or enhance the quality. Professional judgment is nothing but application of relevant knowledge and experience to the fact and circumstances of the case that we are dealing with in audit. Now, there can be various decisions taken by the management regarding materiality. Or we may take many decisions about how we look at materiality. Our judgment, professional judgment, is about deciding nature, timing, and extent of audit procedures. Our decisions, professional judgment, is regarding evaluating whether sufficient appropriate audit evidence has been available. Now, friends, sufficient appropriate words are used many times in auditing cycle, and sufficiency here, therefore, we should know what is sufficient appropriate. Sufficiency relates to quantity, how much evidence I need, and appropriateness needs refers to quality of work. Now, quality of work, that quality of evidence that I must get. So sufficiency is, suppose I need 60% in value to be checked, is sufficient in my opinion to get all material errors. Or I should say 90% of the cash vouchers I must check. What is my sufficiency? Is my professional judgment. What is appropriate? What is the quality of the audit evidence I need? Is my professional judgment, and therefore the appropriate and sufficient and appropriate audit quality audit evidence that we get to get a quality in audit is the professional judgment. Evaluation of management judgment is a professional judgment on our part. So management have several judgment they have taken, or several estimates they have done, and to judge whether it is right or wrong is a professional judgment. So professional skepticism and professional judgment are absolutely required to maintain the quality of audit work. Friends, another thing I like to tell you is your approach. Your approach should be fearless. I need not be afraid that the client will go away if I tell the truth. We must have uncompromising attitude to the errors and wrongdoings. If there is a wrongdoing, I will not be a part of it. I will report. If there are errors, I'll get them corrected or report it that it does not give true and fair view, or it gives true and fair view subject to change of some figures that are required. Otherwise, I should have uncompromising attitude. If I remember my seniors, so many decades back, were absolutely fearless and uncompromising. That time the trial balance was manual, and even 1 rupee difference they will not accept. The reason they will say 1 rupee can be net of few lakhs on either side. This may be net effect. I will not accept. And they used to tell the directors, I know the audit accounts better, I know the audit better, and whatever I say, I will need before I sign. Otherwise, I'll not sign. Now, this is where I think that fearlessness and compromising attitude, when the auditor used to enter the premises of a client, there was a fear that there will be something, whatever wrong I have done can be easily found out because of this uncompromising attitude. Now, friends, here, this was of course about the approach, our audit approach. Now, another thing what we should have in approach is that we should not just go by SA 700 illustrative formats of the report. What we generally, even that SA 700 gives us a format of the report, not only of the company audits, but also of non-corporate entities. What I do is I just go there, copy it on my PC, and just sign it there by filling the blanks. I don't think that is right. Finally, as I said already, audit report is the only document that we are showing it to the outsiders and saying that that document is such that that document is one that is the only evidence that I did the work. And therefore, I should have that document showing my quality of the work. First of all, I should not copy last year to this year. I just copy, and changing the year doesn't help, because it is not the standardized report that is important. If I copy something what was wrong last year, which is not wrong this year, would be reported. So something that is corrected also is reported as wrong. Second is, something that is wrong this year, which was not wrong last year, would be missed out. So I do not think that copying is really a way I should really take. It will give me quality. Obviously, it will never give me quality. Another thing I would like to tell you, that we should have a clarity to draft an audit report. First of all, remember that once I decide that I need to look at audit report line by line and change something if necessary, first I should have a clarity about what is wrong. If you really ask me what is wrong, then I must first look at the accounts. What I'm drafting? I'm drafting the various reports, and what I'm looking at. What I'm looking at when I'm doing the audit, I'm looking at violation of accounting standards. For example, I say that there is a recognition, measurement, and disclosure. 3 things the accounting standard tells us. Now I'm looking at violation for recognition of a particular item, or measurement of an item that is not valued properly, a liability or asset. And also I'm saying that the disclosures as required under accounting standards are not there. And while drafting the audit report, I'm looking at one more thing. Not only I'm looking at violation of accounting standard, I'm also looking at the violation of laws and regulations. Now, when I'm looking at the violation of laws and regulation, there are several laws other than company law, where I am auditing under company law. I will be looking at various other acts which affect the company and say that this is, this something is not right. See, this is a standard. If you go through the standard SA 250, it tells us that it is a responsibility of the management to see that laws and regulations are followed, but it is auditor's role to identify the material misstatement in financial statement due to non-compliance. So if the amount and disclosures are affected, or entity's ability to continue is affected due to violation of any law or regulation, so maybe an amount is not properly disclosed, amount is not properly given, that is, a liability is not fully provided, or we say the disclosure is not given. For example, there is a huge penalty proceedings going on under some particular law against the company, not disclosed. that is violation of laws and regulation is not properly disclosed. And third is the ability to continue may also be affected due to, say, pollution control laws not being followed, excise laws not being followed. Now, those things can affect even the ability to continue. And if these are the things we are looking at in drafting the audit report. What we are looking at when we talk of clarity about what is wrong is, we are talking of income, expense, assets, or liabilities being inflated or deflated. This inflation and deflation is possible. You don't think that always, something, expenses are always increased and income is always, reduced or deflated. It is not true. Even the other way around, it can happen in many cases. For example, in case of super profit, as I said, the commission entry can be made by just one journal entry. That is the way I can fetch the accounts. Another way of saying that this is inflation. Now, deflation is possible that a contingent liability is not properly disclosed. The contingent liability is deliberately withheld from auditor and also from all outsiders because that could harm the company's interest if it is known by outsiders. So many times this is deflated. So we should be aware of all these frauds and how it goes to frauds and how we look at frauds, etc. But if you really feel what is wrong, if you are asking me what is wrong, and if I have to draft the report based on what is wrong, I must be absolutely, first of all, I should have professional skepticism to understand that there is something wrong. And once I know what is wrong, then I'll be able to draft it. Friends, I will like you to look at two notes that we generally give. Friends, two notes that we generally give is, one is loans, advances, debtors, and creditors are subject to confirmation. Friends, first of all, if everything is subject to confirmation, then the meaning of subject to confirmation is the values as stated in the financial statement are not final. When the confirmations are available, they may change. And obviously, when you are commenting like that, or company itself writes, and you are getting EOM, the emphasis of matter, saying all this is subject to confirmation, you are creating a doubt in the mind of those reading the audit report, saying that what auditor did? Actually, there are a lot of alternative audit procedures available to find out whether debtors or loans, advances, balances are right, or creditor is right. There are several other evidences available with the organization. Confirmation, friends, even confirmation standard says that this is only an additional evidence. And unless the confirmation from a major, confirmation is absolutely required if I'm dependent on few debtors or few creditors in my business. And that may show variance, and therefore this kind of notes are coming. But we can ask for confirmation any time of the year, not necessarily on 31st March. We can ask for confirmation of December or September and see that up to that date at least is reconciled. And if I know what kind of reconciliation items are there, I can always look at the subsequent period also. Say that similar error or similar disputes may be there in future period also. And therefore, I can correct the accounts or make appropriate provisions. So, I think confirmations can be used if available, but everything being said is subject to confirmation is something not right. So I must tell what is wrong. Loans, advances which are pending for last 10 years are not recoverable. Or we want to say that the balance sheet of subsidiaries or the associate is not being made available to us because that shows a huge loss or huge negative capital, and my investment in those subsidiaries or joint venture need to be written off or provided for. And I have not done that. In case of debtors, there are some debtors who are bankrupt or about to be declared bankrupt, or in the opinion of the legal team that hardly 10% can be recovered. Now, this kind of clarity I should have, what is wrong. And if I know what is wrong, I can get the entries passed, or if not passed, I can have an appropriate audit report. So I must have clarity about what is wrong. Clarity about what is wrong. Now, in the clarity, I'll give you another note, which we generally use this very often. Stocks as taken, valued, and certified by management. Friends, stock as taken, valued, and certified by management is one of the most dangerous notes. Many times, friends, stock is a material item in profit and loss account or the balance sheet. Balance sheet, because if it is a If it is a trading organization, the stock may be very material item of the overall balance sheet size and asset side. Similarly, in case of manufacturing concern also, change in value of stock can change the profitability from loss to profit or profit to loss. Now, this particular, if the stock is taken by the management, fine. But do you have evidence that it is actually taken by the management? What were the discrepancies? Why were the discrepancies were investigated by the management? If it is valued by management, whether you have checked how it is valued, WIP valuation, whether it is right, finished goods valuation, lower or cost of NRV, whether it is proper. We cannot say it is stock is taken, valued and certified by management, and our certificate is of true and fair view. Then where we stand? If everything is certified by management, which are key figures, then where we stand by saying that we are signing as auditor and saying it gives true and fair view. So I think we must use the alternative audit. Suppose the stock could not be taken up at the end of the year due to pandemic. SA 501 is there. It tells us about alternative audit evidences, how to get audit evidence in specific items, SA 501. And it tells us also that what steps I should take in this case. So in any case, I think it is possible to know what is wrong, and it is possible to draft the appropriate report, which will be the only qualitative report, and it is not possible otherwise. So professional skepticism, uncompromising attitude, and clarity about what is wrong will only give us the quality that we are all expecting to be given. Next slide, please. Next slide, please. Yeah. So here, one is a mother standard which is for audit by the firm, and it has many things in that. And this is international standard, obviously. And this particular standard tells us what the firm should do at the level of documentation, how the firm should actually have the people, human resources who are well trained, well qualified, well trained, well experienced for a particular job, how to maintain a balance between experienced and not so experienced staff, then how to pay them well. Thereafter, you see that there is a work review from time to time. Generally, a small chartered accountant will send the articles to the audit and not bother. They will come back and say, sir, everything is over. During the audit, you need continuous discussion with client, with the experts appointed by the client, with the staff of the client to say what you found from time to time, and you should get explanation. The junior staff, even chartered accountants audit, may not be completely experienced to ask right kind of question. The queries may be fantastic, but the answers are evasive, and therefore finally the audit quality suffers. It is not that the audit you sat in office and prepared a very good plan, and that plan is so good that if followed, it will throw up all possible errors and omissions, and it did throw that. Your staff is also well trained and did. In the solving of queries itself, you lose everything. Therefore, SQC1 or SA 220, they are all saying this, that you need to be there when the work is on. We must review the work of the subordinates and see that we come to right conclusions at the end. So human resource is so much important. Training is so much important. The allocation of work between senior juniors is so much important. The combination of audit team is so much important. All is given there. Now this particular SQC1, we must all read, and to enhance the quality, SQC1 is the real, and there is a implementation guide also. There is a guidance available on SQC1, and I think if you can read both, we will be definitely increasing or using the, enhancing the quality of the work. SA 250, we already talked. SA 300, friends, is talking about the planning. Now, friends, the planning everybody does. All of us feel that I do a lot of planning. But this particular essay is talking about it talks of defining the scope of engagement. If the peer reviewer should first ask us whether you know what you're doing, to define the scope, and unless you define the scope, the final report cannot be right, cannot be of the quality expected by the client. You define the scope of engagement in a letter of engagement itself, that what you are supposed to do, what you are not supposed to do, what is the limitation on your work. It also talks of reporting objectives. That means what are the points on which I will finally report. So it talks of the list of reporting objectives. It talks about the timelines I must observe. Planning includes which date, or even if the date is not, suppose you have 100 clients and you need to complete everything every week, something every week. So your timing of your planning also say this has to be over in 7 days. Don't look at the last date on which this should have gone. I want it by this weekend. So the planning will give the timing to be observed. Then briefing the audit team on significant factors before start of audit, at the time of planning stage itself, developing plan regarding to nature, extent and timing of audit procedure, deciding team size, team combination, etc., composition, etc. So all that is given in SA 300. SA 320, friends, talks of the materiality in planning. Now, friends, the materiality standard, we all feel that we know what materiality is. But friends, materiality is at different levels. Materiality in audit will come, or the best of the audit reports will come. First, I must, to get that, I must have the materiality decided at financial statement level. So I must tell you, I can come to a conclusion that stock is 25% of total assets, or investments are 70% of total assets. Or I can give you an example that for a new company, the land that is purchased, for which title is still not in the name of the company, but still it is shown as the land of the company and title is under dispute, forms 80% of the total asset. This is financial statement level materiality. So it becomes extremely important for me to give more time and to look very thoroughly about that particular item of an asset or liability or a profit and loss, profit or loss statement. Now here that is a financial standard level, statement level materiality. There can be transaction level materiality. I can say that I'm looking at a particular account where, of a particular account, the balance is say 1 lakh. Any item above 5,000 may make material. So transaction level, I say that any transaction above 5,000 for a traveling or a conveyance is anything above 1,000 in conveyance is not possible, and therefore anything above 500, for example, is very material to me. Why it came to conveyance account at all? So I will like to look at the transaction level materiality. It can be balance level materiality. For example, if I have a whole list of debtors with me, and total debtors is a financial statement level materiality. But in that, I have individual balance level materiality. If I find total debtors are 5 crores, anything above 5 lakhs or anything above, let us say, 10 lakhs or 20 lakhs, whatever you decide, is very crucial for me. And therefore, all or negative balances in debtors or positive balances in creditors, which are unexpected, is material. This is the balance level materiality. That negative balances is not acceptable. Negative balance in an expense account is not acceptable. Negative positive balance, that is a debit balance in income account, is not acceptable. So such kind of balance level materialities can also be set. And depending upon the risk of material misstatement, I say this particular standard tells us how to set materiality for giving the quality, for doing the quality. Friends, now there is next standard, say audit evidence. I'm just pointing out to some of the standards that we have. And we can look at evidence standard. I say 500 and say 501. I say results that there has to be sufficient appropriate audit evidence. It says that when designing and performing audit procedures, the auditor shall consider the relevance and reliability of the information to be used as audit evidence. So it highlights the need for knowing the relevance of particular information and reliability of the information. Friends, relevance is because we are in such a world that there is an information explosion. You get so much information, but it may not be relevant to the work that you are carrying out. For example, the company may have many initiatives. That is not important. You are doing the financial audit of a past financial state records, and therefore what company did in the past is important, not only what is going to do. There is a huge information with the balance sheet that these are the future plans of the company, and very detailed explanation how they will do it, what are the risks that they would have, and how they would meet the risk, etc. This is not relevant to the figures that you may have given. They may be relevant to some extent. To the extent relevant, you use. Otherwise, and the reliability of the evidence that you are collecting. All this is absolutely required to complete the audit. The audit evidence should support and corroborate the evidence. The audit procedure to obtain audit evidence includes, and it says that it includes inspection, observation, confirmation, recalculation, re-performance. It talks of analytical procedures. And it says that you should obtain the audit evidence on completeness and reliability of the information. So I think this is where our guidance is so great that we will, if we follow our audit standards, we will never miss on quality. Because this kind of guidance is so important. Every word is important. Where it talks of completeness, it talks of reliability of the information. Completeness refers to that all the transactions of a particular year or particular period under audit are included. Whether they are reliable, the figures are reliable, the information is reliable, and whether it is relevant, what I am getting is relevant. All that is in SA 500. So friends, another standard I will like you to look at is SA 550. SA 550 is on related party. Now friends, this related party transaction states that there is a way auditor is at a very high risk. It has a high risk of material misstatement in the financial statement because of related party transactions. And company law also gives a lot of stress on related party issues and says that if it is a listed company, audit committee is supposed to look at every related party transaction. In fact, the audit committees are asking for outside firms are appointed to see that all related party transactions are properly evaluated and they are at arm's length. They are first identified, then they are properly, valued, and third is that arm's length is established. For that, they are getting the outsider certificate. If other firms, other than a firm doing audit, statutory or internal audit is appointed for this related party transaction. It is so much important for the quality because the standard itself starts saying that there are operations which are extensive and complex. There is an extensive and complex relationship. And there are extremely complex structures of ownership. And that may hide the related party transactions from the auditor. And therefore, there can be another reason is the information system is ineffective in identifying such transactions. Or there can be transactions which are conducted which are not under the normal market terms and conditions. For example, something is at nil value. Now, you cannot even know as auditor that they are nil value. So the related party transactions are so important. It says that in SA 240, it is also stated that related party transactions, they are at highest risk of material misstatement due to fraud. Now, fraud is possible more through related parties, and therefore this kind of standard help us to understand where we lack in quality. Why all frauds which come out, the auditor is blamed because we don't follow such standards. All the frauds you find, the huge diversion of funds to related parties, huge diversion of funds to outsiders where it has been sent outside the country. There are many times related party route is used. Many of the frauds, I don't want to, this is not a lecture on fraud. Otherwise, I would have given you several examples of fraud where related parties were used to siphon out money. In fact, you read in paper also that several such companies are created, several such organizations are created, and then through that the fraud is done. So related party becomes extremely important for us to do the quality work and analyze them properly. Next slide, please. Friends, another major thing I like you to look at to give quality is assessing risk And risk assessment in audit is possible only if you know SA 315 and SA 330 paragraphs. Here the SA 315 is assessing the risk, and SA 330 is auditor's approach to the assessed risk. These two standards we must read. We hardly look at risks. This is talking of assessing the risk of material misstatement. It is not talking of the risk the organization has. Organization may be facing several risks: interest rate, market risk, foreign currency risk, so many risks. We are talking of risk to the material misstatement there. And this particular talks of, say, the auditing standard talks of risk assessment procedure, how we should assess the risk. It says about the internal control environment that we should look at, and whether, as I said, there is a designing defect or implementation defect. It looks at information system of an organization, and it looks at various things like financial level and assertion level risk, etc. And for identification of risk. And SA 330 talks of testing this control, testing the controls, internal controls that you have looked at, testing, doing substantive procedures for looking at these controls. You have evaluation of adequacy of presentation and disclosures. It talks of evaluation of sufficiency and appropriate audit evidence. So it helps us in telling us what are the risks involved. Coming to the next standard is subsequent event. Friends, this subsequent event standard is something telling us that events subsequent to balance sheet are also extremely important. Events between the balance sheet date and date of report to date of presentation to AGM, date of presentation to AGM, and uploading it on the website of the regulator. And thereafter also we got some events which affect the accounts. Now the financial statements, there are many subsequent events we will give us the idea about what should be changed in the financial statement. Either an amount will change or the disclosure will change in the financial statement. So there are some events which gives us the conditions which are existing on the balance sheet date. This subsequent event tells us more about it, and therefore those subsequent events are important. And there are many subsequent events which look very important, like the share price of my investments coming down. I said lower of cost or market value. Market value has subsequently fallen sharply or gone up sharply. Or the other way around is that many subsequent events like fire in the factory and a lot of damages happen to the stock or whatever. Now, these subsequent events do not affect the conditions on the balance sheet date, and it tells us about the right way of approaching the subsequent event, have a right approach to the subsequent event. Friends, the quality again is not an accident. You must know each and every part of these standards to give a right financial statement set which is certified by us. And therefore, I'm just explaining that how important it is. Friends, going concern, you are all aware that we have to certify within 12 months. It is a going concern. Going concern standard tells us that if there is a continuous operating losses, if there are continuous negative net worth, if there is a continuously falling sales, if the people are living without replacement, there is several indicators. It says that a concern is not a going concern. It tells us that whether all the liabilities which accrue for payment, including long-term liabilities, whether organization will be able to pay. And if it is not able to pay, it is not a going concern. And they're not able to pay because there is no way that even the asset sale, non-core asset sale would suffice for this kind of meeting these liabilities, or the creditors are not accepting the extension, that is the banks and other institutional investors are not giving us any concessions. The debentures are due and there is no alternative money available to pay off the debenture holder, etc. Then it is not a going concern. And then when it is not a going concern, all the assets and liabilities will have to be stated at the present value. That means there are three assumptions, accrual, consistency, and going concern. That means the basic assumption is at stake. And therefore, I must look at 570 before I give any report. And that will really be the challenge. Coming to SA 505 external confirmations, again, the external confirmations, it says is an aid. But the external confirmation, even if received or not, there are alternative audit procedures available. SA 580 talks of written representations. Now, friends, written representations are definitely an evidence, but that is neither an only evidence or that is only a corroborative evidence. It is never an actual evidence. Actual evidence we obtain somewhere else. And this is only, this external confirmation and written representation only help us in telling us whether it is right. Even if there is no written representation, my procedures followed should be such that I am sure that the accounts do not have any material error. But when I say this, what I'm saying, there are some cases the written representation is the only evidence. And you will be surprised when I say that to all of you. I'm saying that written representation is the only evidence sometimes. Once while giving lecture, I thought of let us list out quickly as to how many such cases I find in audit where written representation is the only evidence. And I could list out 21 items in the financial statement which have where written representation will be the only evidence. Just that is a quick listing. You can list. Some of you are listening to me can list 50 items. Now, what are the kind of items these are? For example, in case of bank, which are the investment which are held to maturity and which are the investment which are current is decided by the bank. And written representation will tell you the valuation of this kind of investment is different. And banks are allowed to change between the two types of, investment held on a year-to-year basis. Now, written representation is the only one. Another major example, I can give you several. I'll give you another major example is lease assets. In the lease premises, if the lease is for 5 years, which can be extended by another 5 years by the management, the written representation is required whether management has the intention of retaining the premises for 10 years. I'll tell you why. Because the depreciation of the assets in the lease premises can only be done only based on the total lease period. Now, the lease period is 5 years. Assets should be written off over 5 years. Otherwise, they will be written off over 10 years unless the assets have another alternative use after that period is over. Now, if the management intention can be not only by written representation, that management says, we have an intention, say a bank will say, I have an intention to be here for 10 years minimum. Of course, thereafter it depends on both the parties extending the agreement. So all the assets would be written off over 10 years. That means it will substantially affect my financial results. This only written representation. And in spite of that, bank may decide to leave the premises in 3 years or 5 years. But this written representation in a particular point of time received can be of so much importance. Another, you can remember in company audit, you are giving a declaration that as per the information received from the directors, none of the directors are disqualified. You are saying this is a written representation received. Based on that, I am saying no one is disqualified. This is the importance of written representation in audit. And friends, again and again, I am saying quality in audit will come only if I know all these things. Audit documentation 230, I have hardly to say anything on that. All of you are well aware. You must have listened to several lectures on this audit, on written documentation and what is the documentation and why we should keep it. Only I'll say why we should keep it. All the things I'll not say permanent file, current file and everything there, but I will say why it is required. First of all, the documentation will tell you, will be an evidence for auditors' basis of conclusion. As I say, peer reviewer will look at the process and tell you that yes, your process is right. Your conclusion he is not challenging. Whether it should be EOM, CAM, it should be qualification, he will not challenge. A QRB, auditor under QRB will challenge, but here peer reviewer may not challenge. So this is an audit documentation is an evidence that why I came to a particular conclusion. Based on this evidence, I said this is the right reporting. Another reason why audit documentation is required is that I will be able to prove that I am doing work as per the standards on auditing and all applicable legal and regulatory requirements I have followed. So I have a documentation, a checklist saying what should be in notes to account. So I say, yes, this is properly disclosed. For example, the director's remuneration, If it is a listed company, then 197, Schedule 5. You are listing out, and in documentation, you say, yes, if the company is making loss, Schedule 5 applies, and in Schedule 5 of Companies Act, all the provisions I have taken care. So this documentation will help you in giving that evidence. Also, the documentation helps us in accountability of the staff. The staff, there are many times you have chartered accountant under on audit. In addition to partners, you can say that this person did this, that documentation will tell you that, and it is a big protective shield around you. Now, coming to the another thing, it can also, documentation can list out matters for the next audit. Now here the next auditor, next time I do audit or anyone else does the audit, will have a beautiful documentation saying these are the things which are important in this particular concern, and next year this is carried forward. I need to look at this thing next year also. So this is a good documentation, is a good help for that. And in last days, any external inspection or inquiry, the documentation will substantially help me. So I think these are the reasons why we do documentation. Next slide, please. Friends, there is a set of standard which helps us in audit. 1700, I already said that it has various parts and helps us in actually giving an audit report, which is very, very comprehensive. 705 talks of modifications, and modification in auditor's report is whether I decide that it is not a clean report, it is a modified report. So, what is a modified report? It is either a qualified report. A qualification is subject to provision of gratuity being not done, the accounts give true and fair. That is a qualification on one item. But overall, there is no problem of true and fair. Then second way of qualifying is adverse. I say that this is not a going concern, and therefore the asset liability should have been stated at the current values. They are not being stated. The accounts do not give true and fair. Adverse report. Third type of report obviously is the disclaimer. And the disclaimer will come in the audit report only when you are saying that I am unable to know. Now, for example, there can be cases where the management itself is unable to give you a document. There is a raid and all documents have been seized. There was a flood and all documents got destroyed. Or there was a fire, documents got destroyed, or there is a strike or lockout, you can't enter the premises. There can be many reasons why there is a limitation by the management. So you are saying that, I'm unable to get the data. Sometimes there is a limitation imposed by the management saying you can't do this. So that limitation itself can tell you it is very substantial or a material item, and therefore I will disclaim. I don't know, it may be right. Suppose stock valuation, there is 60% stocks are lying in foreign countries for which no confirmation of value is available, and subsequent events also do not tell me whether value was right. In that case, I will disclaim saying this is a very material item of balance sheet, and therefore I am unable to express opinion. It may be right, may not be right. I don't have contrary evidence also that it is not right. Another thing I must remember here in modification of the audit report is pervasiveness. What is pervasiveness? If the matter is all pervasive, it will always be an adverse opinion or a disclaimer. But matter is not all pervasive, but is limited to a particular item. Therefore, I can either give, and then I will give a qualified opinion. Even in case of the information not available, I will like to say that this particular information is not available, but subject to that. So I'm not giving totally an adverse opinion. So there are several things like this. 706 talks of EOM, the emphasis of matter. The emphasis of matter, friends, is something that has to be there in the accounts. First, if the note is there in account, then only you write the emphasis of matter saying that this is something that is not in accounts will not be in emphasis of matter. Or in other matters, this 706 talks of both, and then both the cases, you will state only if, and other matters, of course, you will like to state that, say, opening balances I have relied on based on the other auditor signed balance sheet or something like that. You have done your checks, but you have still relied on many things. That is the other matters you will like to state. But otherwise, EOM can be used only if it is stated in the account. Something that is not stated, EOM cannot be used. Key audit matter, friends, is something which is only for listed companies. It's compulsory to be given, but the key audit matter is a very, very important concept. We discuss so many things with the management, and I think we must look at them and see that some of them may be so important for the understanding of to the reader, understanding of the financial statement. I will like to highlight that. But key audit matter is the first I have to find out what is so important to me. Say estimation of income in case of milestones used by the IT company, information technology company, may be an important matter for me. And therefore, I would say that these important matters, how I have first how I identified, second is how I audited, and third is what is my conclusion. And at the end, I will say that this is not for qualification; it is an information really. In UM also, we say this is not a qualification; it is only attracting your attention to a particular thing or a note in the account, which is absolutely necessary for you to read to understand the accounts right. 720 is another information is where the management is giving huge information, whether it matches with the final set that you have signed. If it doesn't, then there are issues and you need to deal with it. SA 240 obviously talks of fraud. When the fraud, we have talked of SA 2 so many times, but remember, friends, in case of fraud, the fraud is not necessarily only of the assets. We always see cash stolen or misuse is a fraud. Misuse of asset is a fraud. For example, I am using as an owner free assets which are actually owned by the company. So misuse of asset or selling of asset or non-accounting of income or inflating of expenses, I always feel that is a fraud. Friends, this is one way of fraud where someone benefits by that, benefits in a sense that he gets some value out of it by doing something with the assets of the organization. But the second type of fraud, which is stated in SA 240, is extremely important from auditor's point of view, is the fraud in financial statement disclosures. All the fraud, including Satyam fraud, was not financial fraud. It was a disclosure fraud. It was a fraud relating to financial statement being misstated. That means what was done in Satyam was the sale was inflated, therefore debtors got inflated, then the recovery was shown, so bank account was inflated, that was shown as investment, so investment was inflated and investment was never confirmed. Now this is actually financial reporting fraud. It is nothing to do with actual money being taken out of the company. This is used for some other purpose. So we must understand these concepts here and decide. I mean, do the right audit. I must understand the concept. There can be you must have heard several lectures only to understand, to give quality. This is that expectation gap. Never say that auditor is not responsible to find fraud. And therefore, I must first know the definition of fraud, what kind of frauds are possible. And then only I can approach my audit properly and give quality. And then face all inquiries against me saying that I have done the right work and I can escape all the penalties from this particular regulators. Next slide, please. Next slide, please. Some of the issues that we can discuss other than the auditing standards also have listed. Next slide, please. Here, one thing that Institute has said is KYC of the client. You say, what is this KYC? In 2017, this is an international concept, know your client. Quality, there are several ethical issues. Ethical issues in this is that if the client is unethical, if client is doing some practice, who is many times raided by various regulators, if the client is such that in various newspapers and various channels, his name has come for wrong reasons. A client is such that who is very notorious about the fudging the accounts, then know your client will tell you that it is not advisable to have that person as a client itself. Quality in audit, friends, will come only if the information that is flowing to you is right. If the garbage in, garbage out, all information that is coming to you is moderated, or if the information is given to you for a particular purpose to get a particular result, then obviously you are at high risk. And therefore, KYC of a client is done by all large firms in this country. And there are refusals. You just don't look at the amount that you will get in the by doing the audit work. You should see that whether it is desirable to have a client. And if it is not, you are at a risk, and therefore the KYC is a must. Don't jump at the work. You can never give a quality to that client or that client's work. Knowledge of laws applicable to organization, especially the specific laws. If you are doing the laws relating to the say pharmaceutical company you are doing, you should know what is DPCO, drug price control law. If you are doing an audit of a chemical company, you must know what is pollution control law and how much they are following. If they are doing the audit of a builder, what is RERA? So unless you know the laws applicable to organization, you can never be a felon. That is another concept that you must see, that the violation of these basic laws on which, say, you know the banking laws. If you don't know the banking law, then doing the bank, you can never give a felony. So here, that is the concept. Now there are several fundamental principles in ethics which are important to us. Now, fundamental principles in ethics, friends, come from the book. I don't know whether how many of you have gone through the Code of Ethics book. Book 1 gives us all the fundamental principles of ethics, and there are 5 of them. First talks of integrity in the work that we do, being straightforward and honest in all the work that I do. It implies always a fair dealing and truthfulness in the work I do. And we should never be associated with any report or return that is believed to be false and misleading. Is integrity. Friends, objectivity refers to not compromising on professional judgment. We cannot have a biased judgment. Objectivity requires us to be unbiased. We cannot have conflict of interest or undue influence of others when doing work. Of course, professional competence and due care means that I will learn so much, I will acquire so much professional knowledge and skill required to maintain the quality of delivery of my work. To act diligently is another thing. I must act diligently. Of course, diligent means diligent encompasses the responsibility to act in accordance with the requirement of an assignment, to act carefully and thoroughly and in timely basis. Confidentiality, confidentiality of the record not only maintained by auditor, all his staff, not only do work, but also after the assignment is over. An assignment is left for many years, the confidentiality is a permanent liability on the auditor, and he has to maintain that. Professional behavior, obviously, is the behavior which is, you should not do anything not unbecoming of a chartered accountant, I would say. So you have to comply with the relevant laws, regulations, avoid any conduct which he knows and might discredit his profession, or he must avoid such comparison with other chartered accountants and other people. He cannot advertise his work, etc. These are all professional behavior standards, and these ethical standards, friends. Being ethical is a very, very basic thing to audit. Unless your fundamental principle of ethics are followed, nothing can be delivered. Many times we feel a so-and-so professional is unethical. We talk of other professionals also, doctors, lawyers, architects, and even chartered accountants, cost accountants, company secretaries. When we call them unethical, because of their unethical behavior, the quality suffers. If they were ethical, this quality will never suffer. Next slide, please. Next slide, please. Then we are talking of threats. We have to identify and evaluate threats to our work. There is a threat. There are various categories of threats. One is self-interest threat. Having a financial interest in the client is a threat. Now I can invest anywhere. As a chartered accountant, I can invest in any. There is no bar by the CL&CGC. But if I invest in client business and do the audit, I have a stake in that. I can have a financial interest, and therefore he should get loan. I should show better results. And if he shows better result, he will get additional finance. Then he will grow his business, and I will benefit from that as an investor. So having a direct financial interest itself is a self-interest rate to the audit work that I'm doing. Quality can never come if I have a self-interest rate. Now, quoting the fields below cost or having close business relationship is not acceptable. Self-review threat. Self-review threat is something I did. Suppose I did the assessment of internal controls and gave a report that this your accounting package is needs so many changes and I got it done, everything. Now I am myself reviewing that at the time of audit. This is self-review threat. So whatever I gave as certificate, it should be reviewed by me at a later stage. So I can either go for compilation of data or I can go for review, that is auditor. Advocacy threat, friends, refer to I am actually advocating the client's work and interests of the client. I am promoting his interests, and therefore I myself cannot criticize on him at a later date. So I can give quality if I am independent, fearless, uncompromising. I cannot be, because I am myself advocating him at various platforms. Familiarity threats, friends, come from a very, very long association with the client, and therefore it is likely that that familiarity will prevent me from giving a right kind of report and giving a quality report. Now, friends, intimidation threat is that I am intimidated. I am said that I will, the client says I will find another auditor, or your relative who is employed with him, I'll dismiss that relative. Something like that. He is giving you threats. This also includes, intimidation threat includes that other way out, that he will increase my fee if I don't give right. Now that is also a type of a threat. Now there can be conflict of interest like this, and we have the various ways of addressing threat. Either we can eliminate the threat. For example, I can ask my relative to leave. I can apply various safeguards. The safeguards have to be applied in such a way I can give additional time. For example, without looking at the remuneration I get, I can give additional time to see that some of these threats which are mentioned are reduced. I can have the reviewer, outside reviewer for my work, to say whether I'm doing everything right. Can you review and independently tell me? I can use different partners to do different type of job. Non-assurance service is different person is doing, and assurance service. So that a person who does tax is not in audit. Otherwise, he will always adjust everything as per income tax and for the benefit of the client. If I have two partners doing two things, audit partner will never accept what is not right in audit. He will say this is the value. Otherwise, I will go by this for a particular amount. Involving separate team dealing with confidential matters. So confidential matters can be done by one team, and personal income tax, personal agreements, etc. One team will do. Audit will be done by another team. Appropriate reviewer with necessary knowledge, skill, and experience, etc. is important. Now this is where we are addressing the threats in different manners. Go to the next slide, please. Now, friends, we have come to the end of this. These slides I'll not run here. All these slides are coming on SQC1. SQC1, I already said that this is a firm level standard, and it establishes a system of quality control to provide a reasonable assurance that a firm and its personnel comply with professional standard, regulatory and legal requirement, and which is appropriate in the circumstance. Next slide, please. Here, it talks of firm leadership. The leadership should lead by example. If the leaders themselves are under various kind of threat or unethical, nothing will happen. I must promote quality throughout my organization as a leader. That is what SQC1 talks of. And I must have frequent interaction with my staff and tell them what is ethical and at what level I want the work to be done. I must have quality on all policies, procedure, quality control. I must be aware of it, and I must implement. Next slide, please. It talks of engagement, quality review, quality control review. It talks of documentation by the firm. It talks of monitoring of the work. Next slide, please. Next slide, please. It also talks of need for the leadership to recognize that what is the strategy, what is the requirement to achieve quality, that commercial consideration, we must inculcate that commercial consideration. That is, suppose there is a trust and paying me only 10,000 rupees, and I need huge involvement of my staff and myself in that. I will have to do it without considering the commercial consideration. What I would receive, I must give the quality. is what the standard is saying. Next slide, please. It also talks of any person or persons assigned in the operational responsibility, whether he should himself have sufficient and appropriate ability and experience. Otherwise, this work cannot be done. He should be given responsibility and authority both, and he should be experienced enough. Next slide, please. This standard also talks of ethical requirement. It talks of human resources, as I said, that it should be sufficient number of human resources. I cannot expect the quality from the less number of people. I need they must be capable, competent, committed, and good in number, right in number to do the quality. Next slide, please. Now here it also talks of review of responsibility by an experienced team or for the other team, which is less experienced, and you review it for various things that you reach and the conclusion reach. You cannot leave it to the team which has done the work to finalize it, to come to the final conclusion. Final conclusions will be taken by a review team, because review team is independent and it says your evidence is not sufficient to take this decision. So they will ask you for more evidence, more work to be done, and then come to the conclusion may be different from what you have come to. So review team will decide about the conclusions reached, evidences obtained, about sufficient and appropriate evidence, etc. Next slide, please. It talks of policies to be established for confidentiality, safe custody, integrity, accessibility, neutrality, etc. Next slide, please. It also talks of policies procedure to give reasonable assurance of the quality, relevant, adequate, operating, that all the quality controls are adequate, they are operating effectively, and they are actually put into practice. This is why SQC1 is called Mother Standard. It says everything about quality audit. Next slide, please. Now here I'm just summarizing before I close what I said. I said you follow accounting standard, guidance notes, standard on auditing, which are given by ASB, AASB. I said you follow all the guidance given by FRRB, QRB, TAQRB, and other committees which publish books on common errors in the accounts. There are several lectures also on common errors found in accounts, in tax audits and all. So I think you can listen to that. I said you use the two models which are issued by the institute, audit quality maturity model and digital competency maturity model that we have given from the institute, which is used worldwide. That will enhance your quality in audit and quality of your technical staff who is having the quality to do the digital. When the client is fully digitized, you must have your own standard to do that. Then use of audit tools. You can do audit tools to do the appropriate work. You should have professional skepticism. I explained why professional skepticism, what is a professional skepticism, and how it will substantially help you in doing the work. I also told you to follow ethical standards in spirit. In spirit is extremely important from standpoint. Don't go by what is ethical standard. I said in ethical standard, everything is for giving the quality. And unless if the person is highly unethical or unethical at a point of time, obviously no quality can be expected. No quality can be expected. So ethical standards are equally important as in addition to technical standards, which I talked about. I talked about several technical standards and gave you in a nutshell what the standard is talking about. Everything has to be read by you on your own and implement them. Don't even ever try to say, I know everything. Don't ever try to say that this is not for me, because these standards are changing from time to time. Internationally, they are changing. They are adopted in India, modified in India, but we also are internationally compliant with all the standards. And the quality will come, which is expected of all the stakeholders, including regulator, if I do the work in what all the things I mentioned here. If I do all the things, then only quality will come. Then only that gap which I talked about, that whether auditor has done the right work or not, will be discussed, if I can say this in public, that this is the way institute is going, this is the way my profession is going, this is the way all us together work for better audit quality. I do not think that we will falter, and therefore, moment the less we falter, I'm not saying it is, the auditing standard themselves say that the error cannot be, detection risk of error can never be zero. Whatever you do, there are limitations, there is a limitations on the audit processes, and these limitations always, there are several I have not discussed. The limitations decide that you can never reduce the audit risk to zero. That is, what is that? Reducing it to zero. That this audit, once audit is done, it is not, it is not free from material misstatement or any other, which is I'm saying. But I can substantially reduce it. I can keep it in reasonable, acceptable limit, and therefore the stakeholders would be convinced that audit profession is doing fascinatingly well and putting all the efforts to see that the financial statement presented to the stakeholder are of highest quality. With this, I'll close. Next slide, please. Thank you, friends, with all this for a very, very patient listening. And I hope that whatever queries you have, I will request Rakesh to take up, or otherwise we can have a close. Anything you can always send it to CL&CGC by way of the mails. Thank you very much. Yeah. Sarita ji, you can close if you want.
Yeah, there are no as such queries, sir. And we are already on time. So yeah. I think, Sehgal sir, we can close it.
Chairman sir, a very detailed presentation, and in fact, most of the things are known, but the way you documented the entire thing at a place, and not only very enriching, but I think it would have sharpened and it would have rekindled that kind of thought process within the mind of our fraternity, that what the stakeholders are looking for. I think the way you covered and touched upon various aspects, whether it was the digital competency maturity model or the audit in the real brick and mortar environment, I think very well done presentation, and thanks for your efforts. And I think the feather in cap would be the bringing out of the guidance note on Caro amendment, and I think that is what the membership is keenly looking for. And after the council, it should be through. Overall, yes, it was very much wanted, and I think Sarika ji, the presentation and the other details would be captured in some form so that it is available to general membership at one place. On behalf of the committee, on behalf of the entire staff team, thank you, Chairman sir, for your initiative and the excellent presentation you made out to the membership at large.
Thank you, sir.
Thank you so much, sir.
Thank you, Sarita ji. Thank you, office.
Thank you for taking up this session, sir. Thank you so much.
Thank you.
It was really enriching session, sir.
You can put it up on the website of the institute so that everybody who wants to have.
Sir, after 3 months.
Hey, you can put it today. Today, putting it is no problem.
So now putting it and removing it at 8 o'clock would be really difficult.
No, it's okay. It's okay. Those who want to download can do it. Yeah. Thank you. Thanks.
Yeah. Thank you so much, sir. Thank you.
Good day.
Thank you.
Good day, sir.